Hi friends, welcome to A to Z Learning channel. Today our topic is dividend payout by bank. It's a topic that impacts most shareholders because banking stocks form a significant part of our Nifty listed stocks. Therefore, those who are invested in the share market directly or indirectly are invested in banking stock. So whatever is bank's policy in terms of their dividend payout, it will have implication on the return that shareholders can have from their banking stock. But before I start my video, I would like to hope that you are all staying safe and well in your family and in your homes. India is experiencing the worst time under this COVID pandemic. Number of new cases are going up quite significantly every day, and I seriously hope and wish that you and your family are all staying safe and well. Coming back to the video and the content that I have picked up, the topic, sorry, that I've picked up for today. As I said, the topic is about dividend payout by banks. These dividend payout that are paid by bank are subject to strict guidelines as declared, as introduced by the RBI for a while. So in order to understand what what is happening right now, let's understand this in four parts. First part, we will look at what are the current guidelines around dividend payout. All of you would recall that for the financial year 2019 and 20, which ended at the end of March 2020, when we were all experiencing the first wave of COVID-19 pandemic, RBI banned and did not permit any banks to pay any dividends for that financial year. So the typically shareholders used to receive dividends in the period between April to June, July. They did not receive any dividend from any of the banks in respect of 2019-20 financial year, and it was mainly because of the COVID uncertainty. Banks were instructed by RBI to conserve their cash, conserve their capital, because nobody knew how long it will continue and what will be the implication for the businesses and therefore banks. So there was no dividend payment in respect of last financial year, so 2020. Last week, RBI announced its guidance uh, by releasing a new notification to guide what should be the policy in respect of banks paying dividend for the financial year 2021-22, the year which has just ended in the year 2020 to 21, the year that ended in March 21. Because situation hasn't changed much. In fact, it has gone really bad. Last year, March 2020 or April 2020, situation was bad, but India number of cases were still manageable. But right now, from last couple of weeks, the COVID impact is very, very severe in India. India is now the number one country in the world, which is a very grim milestone to be achieving. In terms of new cases, our hospital health infrastructure is near collapse, and it will have implications for the business performances, business ability to make profit, and therefore shareholders' return. So that's the current situation. Now, the next question comes before we talk about what are the kind of curbs that RBI has announced last week. Let's first understand what is the general guidance, what is the standard RBI rules on banks' ability to pay dividend. Of course, this is more in the context of normal times. We are not in normal time, therefore the curbs are in place. But let's first remind ourselves what are the general rules in normal times. Banks are in normal times allowed to maintain a dividend payout ratio at such level to make sure that it does not exceed 40%. So banks cannot pay more than 40% dividend ratio. Banks are required to have 9% capital adequacy ratio for the year for which they are declaring dividend as well as preceding 2 years. So for almost 3 years, they have to have 9% capital adequacy ratio before they can before they can consider declaring any dividend for shareholders. Similarly, the net non-performing asset ratio should be less than 7%. So if a bank has more than 7% non-performing asset ratio, then they are barred from declaring any dividend. So these are the sort of kind of normal rules that banks have to comply in normal times. So these are the standard rules that have been in existence from, I would say, 2004 when RBI regulated the bank's ability to pay dividend. So those are rules for normal time, which bank completely banned for the year 2019-20, and further curbs have been announced for 2020 to 21 this year. So therefore, the question comes before we again talk about curbs, why the curbs are needed on banks' dividend payment. So I think first of all, let's understand that the pandemic, the COVID-19, continues to pose uncertainties on the businesses in India. We know all the main cities like Delhi, Mumbai, Bangalore, Maharashtra as a state, all the kind of main kind of cities in Maharashtra, they're all going through these severe restrictions. Delhi has got a virtual lockdown, which means basically people are not going out, people are not spending, people are not buying things, and therefore businesses are not able to open their shops, restaurants are not are open for business. So businesses will all kind of see the negative implications of these restrictions and lockdown. And if businesses are not able to make money, banks who have funded them will also be exposed, because if businesses don't pay back to the banks, banks have to kind of classify those as a non-performing asset, and non-performing assets need to be provided for in the bank's P&L and balance sheet. So it's a kind of vicious cycle. The businesses don't perform, therefore they are not able to pay to the banks. Then banks start to see a significant reduction in their profit, therefore banks don't perform, and then banks need bailout and all that stuff. Therefore, the urgent need right now for the banks is to conserve their cash, ideally raise more capital, because they don't know what will be the scale of the problem that will be hitting them in few months' time. So hence, their ability to pay dividend to the existing shareholder based on the current level of profitability is completely curbed. Its curbs have been announced by RBI because banks shouldn't do that. Whatever cash they see they have available right now, they should not end up paying all that to their shareholders as dividend, because they will need this cash to kind of have the right level of capital to run their business, to also provide for any NPAs that come from the businesses which are struggling, which are going to struggle as a result of these restrictions in India. So that leaves us with the last question, that what are the curbs that RBI has announced? So RBI, good part is that it is not as draconian as it was for the previous year, which was 2019-20. For 2019-20, they simply said blanket no. Banks were not permitted to pay any dividend. This time, good news is that banks will be allowed to pay some dividend. And that's the reason the term that they are using is that dividend payments are curbed. Dividend payments were not permitted for 1920, but this time for 2021, these are curbed. These are not banned. And what is the curve that they have announced? Is that the standard normal time dividend payout ratio has to be maintained at up to 40% maximum. So based on that standard matrix that banks use to come up with what sort of dividend payout they want to give, RBI is saying that you can do only half of that. So if say bank applying the standard rule come up with a outcome that they can pay 20% dividend to their shareholders, RBI is saying that they can't pay more than half of that. So in that example, instead of paying 20% dividend, they can pay only 10%. And if the standard metrics outcome is to pay 10%, then as per RBI notification, they can pay only 5% dividend this year. Of course, banks can still choose not to pay anything, but they can't pay the full amount that the standard metrics allow them to pay in a normal year. So I hope this simple short video about the dividend payout by bank is helpful. We would look forward for your comments on this video. And if you've liked our video, then we would urge you to please press the like button and share this video with your friends and family. We always try to kind of make our videos simple, easy to understand, easy to follow, and we all usually pick up the topic that are relevant, that is playing in people's mind currently. So we hope that the topic of today's video has been helpful for you. If you have not subscribed our channel A to Z Learning as yet, we would urge you to please subscribe our channel, become part of our viewers family, and that will give you chance to uh, also help us decide which topic we pick up for the future videos. So thank you very much for watching our video and good luck with your investment decisions.